All right. Hey everyone. It is September 13th, Saturday. Hope you guys are enjoying your weekend. And today I'm going to broadcast to you guys how we're going to allocate risk. So, as you guys know as traders, this is a risk management industry in order to become successful. If you're over leveraging and whatnot, unless you're like J Jesse Livermore, if you guys know about Jeffrey or Jesse Livermore. I mean, if you guys don't know him, then search him up. He's one of the most successful people. Obviously, he's passed away now, but he used to risk 50 to even 100% of his equity in order to be, a top trader. Not in order to be a top trader, but that's what made him a top trader is by the type of risk that he was putting on. Um, but if you can stomach the risk and you have a lot of conviction, it'll clearly make sense. If you don't have that much conviction and you're full porting or 50%, risking 50% of your equity to, make those gains, not really a good idea. So what I'm gonna start doing is, well, today, I'm not sure about any other day, but today I'm definitely gonna discuss with you guys about how we're gonna allocate risk or how I'm personally gonna allocate risk. I just want to share with you guys my personal ideas. So what I'm thinking is I'm gonna have A plus, B plus, and C plus setups. I think psychologically, starting out with creating mental frameworks of a graded type of trade, such as A plus, B plus, or C plus. I think starting out with three basic different types of risk, such as risking 3%, 2%, or 1%, it's gonna be helpful. I don't think going because I tried this and it was like so many different ways of I just implemented so many different ways of trading and I think it just didn't really work out in my favor mentally where I did A plus setup, A setup, B plus setup, B setup, C plus setup, C setup, D plus setup, D setup, E plus setup, E setup. And that was like 8 to 10. I don't remember right now, but it was like 8 to 10, whatever you can count it, 8 to 10 different trades, setups. And they all had different sets of risk. So for example, highest maybe A plus setup would have been like 10%, B plus setup would have been like 5%, like A plus 10%, A setup 7%, things like that. And then it just trickled down, lowering the percentage based on the grade. I think starting out with three different types of risk makes this way easier for me to comprehend and way easier for me to just accept risk and trade with the trend. But yeah, so what I'm gonna do is I'm going to share with you guys a couple of my risk management ideas. I've been reading a lot of Market Wizards. I've been telling you guys. Um, Here, let me share with you guys this quote that I read today. It was in the Market Wizards book. This is Ed Seykota. He's asked, "What can a losing trader do to transform himself into a winning trader?" He says, "A losing trader can do little to transform himself into a winning trader. A losing trader is not going to want to transform himself. That's the kind of thing winning traders do." Let me know what you guys think about that quote. What I think about that quote is he speaks out to, well, he speaks for people who are, actively, I want to say he's speaking to the people who are like, who really want to be profitable, but they get in their own way. And I think most of us traders experience this stage where you feel like you've got down all the fundamentals, you feel like you have an idea maybe of risk management, but you possibly don't want to fully commit to it. And if you're not fully, if you're not wanting to fully commit to something and you're like halfway in, halfway out, or 99% in, it might be that 1% of you being out instead of fully in that can hinder your process and hinder your potential of getting to the next level. So that's something that I think I've definitely experienced and I still actively experience till this day. But I'm definitely improving. So um that's good. And I hope you on the other end are also taking notes, journaling the same way that I'm journaling here, taking notes. I have TradeZella that I use for my, my weekly journal so that I at least see, or even monthly, daily journal, so that I at least see what kind of how many trades I've taken for the week, where I've ended up. Am I in the red? Am I in the green? Am I in the red or the green for the month? Am I in the red or the green for the week? And also if I'm even in the red or green for the day. So just a lot of things. Because I used to take, if you guys seen months back, I was taking 50 to 60 trades every single week. I promise you guys, if you guys look back to where I started, when I started, because I started about 6 years ago, but when I started to document my journey on YouTube and post videos, if you look way back, you're gonna see that I was still using TradeZella, and the amount of trades I was taking were up to like 60, maybe almost 70 trades for the week. And I've dropped that number down by about 80%. I've reduced that to about 80%. Or I want to say, I mean, definitely 50%. I'm gonna say over 50% because this previous week, I think I did about 15 trades. We're gonna see in a second how many trades I took last week. I know it wasn't 50 trades for the week, but when I started cutting down not how many opportunities, but how many different pairs I was looking at, or how many different commodities, maybe even, different types of things to trade, different types of security to trade. Do let's say like, maybe looking at Forex, commodities, crypto, um, indices, four different things. Maybe you might want to narrow down to maybe two different things. When you start narrowing down to two different things, maybe you want to filter out those two different things to just keep on narrowing down so that you minimize how many different opportunities you're looking at on a daily and also weekly basis. So it kind of gives you a healthy diet to start margining into high probable setups instead of and staying away from, or regulating I think it safely allows you to step away from looking at like four different USD pairs: USD JPY, GBP USD, NZD USD, um, USD CAD. Like I was looking at like four different US dollar setups, and I would, if I see opportunity for each of them, I would risk about 5% on each trade. And that right there is 20%. So when you start thinking about what you're doing on a deeper level, um, that's when you start to understand more about yourself. You start to understand more about your risk management. You start to understand more about the opportunity. You just start to understand more about almost everything. And I think, I for sure think that you shouldn't always risk. I mean, I personally think that you should delegate certain amount of risks depending on the quality of the setup. Like if there's a high time frame, let's say you're looking at the daily time frame and you're looking at the 1 hour time frame. I think that if you're getting in at the right time and you're in the right direction, I think that you are like that first 1 hour pullback that you get and you enter, I think that that's a solid, maybe I recall that as an A plus setup. Personally, for me, that would be one of my A plus setups, so I would risk the most on that one. And then B plus setups, that's where I would start risking like 2%, where I'm like adding positions. But if I'm trading an external to internal against a daily, but into a daily zone where I think that there's going to be an area of interest of a potential reversal, I'm going to start risking 1% from external to internal. Um, right now I'm debating on whether I want to if I get stopped out, I would look for re-entry or not. So I'm debating that because it's something that I'm actively implementing into, my strategy. But so far, I currently only have an A plus, B plus, and C plus setups. I excluded and removed, I cut out the A setup, B plus, B setup, and C setup, and all the other ones. So now it's only A plus, B plus, C plus. We're only looking at three different opportunities or three different types of setups, and that's also three different types of risk. So 3, 2, 1, 3%, 2%, 1%. 1% is the lowest, 3% is the highest that I'd risk. Along the way of seeking a, let's say I'm on a high probability setup, along the way, if I see that along the way, there's been a hold on. If I'm like on the way on the A plus setup, I would take partial, maybe about like 1% out of 3%. And I would probably, yeah, I would take home that like maybe 1% if I see that the market gave me like a deep retracement and it almost seems like market's gonna turn. As long as the candle closed from external to internal in the opposite direction of where I'm anticipating and break structure, then I think I'm gonna consider taking about 1%, so partial. But I will not take full profits um for an A plus setup. I just won't. I'll trail my stop loss once price has gotten to my take profit. But I do not, I just, in my profession, not professional, in my experience, I think just trailing my stop loss after take profit has been hit. Um, it seems like it's the most beneficial. It really does seem that way. Long term, because especially on like, commodities and like indices, because a lot of times they just continue going up or continue going down for a while. Mainly up, right? And it's almost like I have a stock portfolio. And in my stock portfolio, for example, if I'm invested into like Vanguard every month and I'm just consistently buying with no sells, then it's like I can also do that in my trading platform or my trading brokerage, my trading platform. So and profit, right, by just holding. So I think it's important to start looking at the higher time frame and making sure that before you close out of an A plus setup or before I personally close out on an A plus setup, that's in the right direction or in the direction that the market is anticipating to continue going up in, I think thinking more than twice about closing all positions just because the market might do a pullback, shake out unexperienced traders. I think we should, or I'm gonna start questioning. I want to give you guys ideas so that you guys can, if you guys want to, implement it or think about it on your own time, it's something to consider. This is just stuff that I've been reading, and I've been applying in my trading journey. So far for the month, I'm only up like a little over $100 on this, what, 500 or $600 account. Um, I was up over $200, but last week I had an L week and I lost a little over 100, so I was up 200 or a little over 200 for the month. I lost about $100 on this $600 account. It was around like 400 or 500, but I added like $200. Now the account's equity is around 600. I might throw in another 400 just so that I'm at about 1,000. Um, I think I'm getting more comfortable with the type of risk management um that I'm implementing into my trading strategy. Everybody has their own types of ways that they trade. I don't know. I don't know if because I genuinely think that like somebody can help you trade. Like I can personally help people learn how to trade, but it's something about people who I think people need to look deep into themselves and see like why am I holding on to this trade and excuse me. They need to have full conviction and they need to actually accept the risk. If you're someone who's trying to learn how to trade and you're paying $5,000 for a trading course and whatnot, and you don't truly like at the end of the trading course and stuff like that or mentorship, you just don't accept the risk, you're gonna find yourself still losing and still being a non-profitable trader. So you can learn why risk management is important. You can learn different strategies. But if your conviction is not high enough to accept the risk or learn how to move your stop loss and profit, right? The trailing stop loss, and then like when to use your trading stop loss, then I think that it's not you're just not you're not gonna be profitable long term. And you're gonna end up making a lot of mistakes, and you might be one of those people who continuously blame the markets. And you might even be one of those people who just claim and run with the fact that, not even the fact, the idea that the market is a scam, and you just might look at every trader as a scammer, or you might even look at every mentor that who trades as a scammer. I mean, most traders, most mentors uh who trade, I would probably say are scammers because mm, it's not easy. It definitely is not easy. It's something that I've been working on for about 6 years. Um, and there was a point in time where I ran an ad to teach people how to trade. I did that before. Um, I don't know. I might do it again. We'll see. But I remember at that point in time, I really wasn't that aware of risk management as much as I'm aware of how risk management is implemented now. So, um, yeah, but yeah. So let's do this. What I'm gonna start doing is I also wasn't really that um aware of like market structure. But yeah, let's start. I'm gonna start sharing my screen. So let me minimize this page, X this out. I got trading view up. I haven't really marked out anything. I've only really been looking at gold as a only commodity and the indices. Here, let me share this with you real quick. All right, you guys should be looking at my screen now. We're gonna do some markups. So today's markup is right, we're gonna do gold. Oh, wait, I got like so much stuff. Oh, before I put away this book, let me share with you guys one more quote. Okay. Uh okay. Let's do this. So Ed Seykota, the same is by the same person. He was who was being interviewed. He was asked your reference to a first system implies that you eventually change systems. How did you know when your system needed to be changed? He responds, systems don't need to be changed. The trick is for a trader to develop a system with which he is compatible. So I think that this is important for traders like us to know that you don't have to completely change your strategy or your system. You just need to adapt. Like, if you have an A plus plus setup the same way that I did, and I do see improvement. So I'm gonna give you an example. The example I'm gonna give you is the same way that I've been trading, right? I've been trading pretty similar. I haven't really changed much. I have been changing a lot of risk management. So instead of risking 15% on an A plus setup. Instead, I would risk at most 3%. At most. So at most 3% on a high probability trade setup is what I would risk. Um, I mean, like my trading strategy's pretty much been similar all this year. Uh, yeah. So you don't really want to change everything in my personal preference, recognizing with the quote that I just shared with you guys, or resonating with the quote that I just shared with you guys. Me personally, I'm gonna side with Ed and say that, you know, let me know what you guys think. Let me know what you guys think about that quote. Okay, boom. So what we're gonna do is we're gonna look at this. Let me delete these alerts. I know I'm currently in a trade with gold. I think I did an add-on. So the add-on I did was, where is it? Um, 15. Let me refresh just in case. Okay. All right, 1 minute time frame. I really want to know why oh no, I'm in a NASDAQ buy. I'm bugging out. All right, so 15 minute, let me look at the 1 hour. So uh okay. So I seen that there was a 1 hour low here, and what I've recently been learning is that when I think I entered right here. But why is this is actually a short. So yeah, when I got a little bit of a pullback, I put the stop loss here, and then I'm gonna continue riding the 1 hour until it breaks structure. So I've recently learned in the book Market Wizards that you don't necessarily, I'm not gonna quote it. Well, actually, this might have been something I was listening to, actually, because I do listen to those like Jesse Livermore YouTube. mindset audio videos that are posted on YouTube. Recently, I've been doing that and it's been helping. And the reason why I started doing that is because for me to become a good, for me to become good in sales in the insurance industry and do what I had to do was, or what I personally did was listen to a lot of hi high quality audio, um, I would say books, but also like YouTube mentality, good mindset videos like David Goggins and other people. So my YouTube, it was like on my phone. I was listening to, I think it was like maybe music or like an interview or whatever, and then it moves on to a next video, and then it's just a Jesse Livermore audio mentality audio. And I was like, this is interesting. So I think because those type of audios help me in sales, I truly believe that the audios in the trading industry should also help me with becoming profitable as well. So I'm going to take advantage of that. I think all the help you can get, especially if it's for free, I think you should genuinely take advantage of it. So that's what I'm going to I'm going to continue doing. And if you guys have been looking at the markets recently, you can see that if we look at the daily time frame has finally closed above this high, right? Which this was Thursday's candle. So what I heard on the audio was we are so conditioned to buying things at the lowest price and selling things at the highest price. But that's where most of us are going wrong because the person who wants to wait until price falls again before buying many times are going to be waiting forever and you're going to be missing out on opportunities. And in fact, according to I said Jeffrey, according to Jesse Livermore, in the audio that I heard, so I'm not sure if this was his ideology, but according to the audio that I heard on YouTube, based on Jesse Livermore's way of trading, is that when price has been at the highest or creates a higher high, that's actually there's actually the least amount of resistance, which makes it a high probability or one of the highest probable set I don't want to say setup because you'd have to look for, your own setup. I would say it has the highest probability for continuing to go up because it has the least resistance. So that's what I got from that. And I have read parts like that in the books that I've been reading, but hearing that also from Jesse Livermore, someone who was as successful as a trader as him, I think that also allows me to be more convicted and accepting risk when I'm placing, bets in areas like that, to continue going bullish, or for example, continuing to go bearish if, it was vice versa and like an inverted market for seeing that, the daily time frames are actually bearish. So I'm gonna continue to hold until, price indicates maybe on 1 hour time frame that we're gonna start going, bearish. I think that's a something that I'll do. But what I would personally start taking into account is since we have now created a higher high, before we would see this as the low, or wait, because this one actually has my indication or text stating that it's a daily low. So this was the daily low around here. Price pulls back and then we get a new daily high. So now This is our lowest low. Now, what's our range? Our range is from here to here. This is our range. Boom. So I'm gonna keep this here. I'm also gonna monitor the 1 hour time frame. So if I see that the 1 hour time frame is, let's look at the 4 hour, right? So 4 hour, if we're looking at a 4 hour high, I mean, because we've made the daily time frame. So if we've made the daily time frame and price, like the low of the daily candle is actually down here on the 1 hour time frame. So this is the 1 hour time frame daily low. That would mean honestly that would wait, actually. Uh no, I'm wrong. Because I already said that I this is my stop loss. So this is the 1 hour time frame. I would say that if price takes this out or closes beneath this low, then I'm wrong again right here. So if price closes beneath this 1 hour time frame, then I would say we're probably gonna head down to at least this area, 23,050 or 555. And then if we look at the 4 hour time frame, we're probably gonna see a lot of targets around that area. You can see one touch, two touches, three touches, four touches, right? So this is clearly an area of interest. If we were to pull back, this could be a great opportunity to start looking for buys before creating a new high, in my experience. But yeah. In the meantime, though, since we're virtually bearish or bullish on weekly, daily, 4 hour, 1 hour, I'm going to continue looking for buys. And I'm going to stay in the buy that I'm currently in. And the buy that I'm currently in looks like this. I got in around here, which is around the pullback, and my stop loss is around here. I only risk about 1%, which is uh around the least amount that I would risk. Around 1% or less is, I mean, I would like the lowest I'd risk is probably like 0.5%. So 0.5% to 1% is the lowest that I risk on like a C plus setup. And then B plus setup, I'd risk about 2%, and then A plus setup, I'd risk about 3%. So yeah, there's my risk management. Yeah, I just don't expect price to come and take this out. This was Friday's, I mean, that's actually not, that is Friday's, no, this is Friday's low. Um, yeah, that is Friday's low. Here is Friday's low. This is a pullback in New York session. So this is my stop loss. I'm gonna continue writing that one until price breaks structure. And if price breaks structure again, I'm gonna look for a pullback, but my area of interest could change depending on how the daily time frame looks. So it's key to continue looking at just to continue looking at the market. So that's why I thought I actually, in my experience, that is why it's important to minimize the amount of ID, securities that are in your watch list because it's easier to understand the markets if you kind of simplify how many things you're looking at, you know. So many different things can happen on a in a market that you can benefit from if you're paying attention. Excuse me. If you guys haven't noticed, I've added US 30 into my watch list because there was an opportunity I missed out last week. I wish I didn't miss out on the opportunity. Unfortunately, I did, and I would have been up a good amount. I really would have been up a good amount. Um, all right. What am I gonna do? All right. So what I'm gonna do is obviously we're bullish on the weekly time frame, right? That's like clear as day. We're bullish on the weekly time frame. If you haven't noticed, um, the low is right here for the weekly. Actually, yeah, this is the low of the weekly time frame. Um, if we get a pullback of the weekly time frame, I mean, I wouldn't go against the daily, but I guess if the 4 hour, yeah, the 4 hour would have to break down here, but I doubt that's gonna happen. I'm not even gonna try to go against the daily time frame, especially US 30. All right, so just looking at key levels where there were highs created and then pullbacks. So we've got this, I would delete that, but I'm just it just helps me uh understand the pullbacks. In the night, I aim dark and calm the star I have told. 45023.5. 45 0. So this is 36 is 23. All right. Uh, mm, 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 mm. Mm. All right, so this would get replaced with daily low. This would get replaced for a daily high. Now we know our range for US 30. Now that we know our range for US 30, we're gonna start doing the 4 hour. I mean, we can start looking at the. Let me delete that. We can start looking at the 4 hour structure. So the 4 hour structure is look at this. So 4 hour high, 4 hour low. We got a 4 hour here's a 4 hour high. They swiped the 4 hour Let me look at the 8 hour time frame. All right. I mean 8 hour, what about 16 hour? 24. Oh, all right. Well, I'm gonna consider this 4 hour as not always right, but I'm not always right, but if this is, if I'm right about this, I mean, I hope I am, but I'm gonna consider this as a 4 hour low. What I'm, mm, 'Cause what I'm seeing right now is 4 hour bullish. Daily's already made its high, but the daily time frame, if you look at the 1 hour time frame, the 1 hour time frame has already shifted. So what I'm thinking is I am not exactly sure if this is, I don't want to go against the 1 hour time frame, that's for sure. And I'm not really, I've seen that I haven't been that successful with trading external to internal. So against, when I say external to internal, I mean against the daily time frame. Um, so trading against the daily time frame is in my interest for as a C plus setup. US 30, I really don't think it would be a good idea for me to trade against the daily time frame. So I think I would wait until the 1 hour time frame has shifted from being bearish to going back to bullish. So I'm gonna put a an alert there. And if we look at the 50 minute, I mean 50% that actually hit the on the 4 hour time frame, this low right here that I think is the low is 50% of this range right here. So this might get taken out. And then I do see that there's some imbalances around here on the 1 hour time frame. So this could possibly be where we're going before creating a new high. I'm gonna set my alert there. I can trade until we get there, but I just don't I just don't know if because I was gonna enter this before, but I was expecting for price to at least come back into this area above right here. I didn't get that, and I was mainly waiting for that because if you look at the 15-minute time frame, there was an imbalance around this area. Unfortunately, we didn't get that. There was an imbalance on 15-minute time from here, which got filled in, but there were two more potential opportunities to sell from, and I did not get that. So, um, yeah, that's unfortunate. Also, it's a high, it's a risky trade setup for me personally. So, trading against the market, so I just sat out. I'd rather sit out of the market instead of going against the trend and not being fully um not having full acceptance in my risk. All right, so that is pretty much uh here, let me put imbalance here. There we go. Um all right, I think this is oh wait, I'm gonna just As long as I can give myself an idea, boom, there we go. Look at the daily. There's also around daily, daily EMA. The high of this was it 45023. Close of this was 45025. Are you serious? High of this 023 025. Okay. I thought I was bugging. All right. Now that we got that out the way, I mean, like, it would be super wrong if I like sold right here. I mean, yeah, you can, but 1 to 5. I just don't want to pull back. That's what I don't want. But yeah, I mean, and it's also external to internal, so it's riskier than internal to external, according to my statistics. All right, so I'm gonna leave this one. I don't want to trade every idea, um, obviously. And I didn't mark up gold yet. All right, so we see that daily time frame gold has gave us a lot of bullish momentum. We've hit all-time highs, 3,600, and what I'm already looking at is that we have a daily low here. If we got a daily low here, let's look at the 4 hour time frame. We're clearly bullish on the weekly time frame. What about the 4 hour time frame? So I can already see that this is a 4 hour low as well. So what I want is the I want the market to drop down to this area. So this is my area of interest, and I want to start looking for some buying opportunities below 35.73 so that I can start buying more of gold. That's really what I want to do. I don't want to trade against the market. I mean, markets already showed that 1 hour time frame indicated, bearish momentum. But on the 1 hour time frame, like I would have shorted the market here, but when I looked at, the imbalance, I seen an imbalance here, and I was like, bro, like, bro, not even that. 15. Look at the 5 minute. There was more imbalance here, bro. I'm like, bro, dog. I was waiting for the market to come here, but it didn't. So, like, just look at this. It stopped down here. So we could potentially see price come up here. Only way I'm trading this is if the 1 hour time frame shifts back from being bullish to going back to bearish. That's the only way that I would trade this. Because we're currently bullish on the 1 hour time frame. Let's look at the 2 hour time frame. Uh, this is actually insane. It's insane because the 2 hour time frame, in order for 1 hour time frame is bullish, okay? But the 2 hour time frame is bearish. 2 hour time frame is bearish because we haven't closed here. Literally just wicked it. If price were to I'm bugging out. We haven't closed above here, sorry. So that's why we're still bearish on the 2 hour time frame. If the 2 hour candle comes in here and closes above, then I would expect for us to be bullish on the 2 hour time frame. So we'll see what happens. I mean, I'm gonna keep my alert here. I'm gonna put potential 1 hour shift. Oh man, I mean, I don't know. Maybe this might be a confluence that I would consider. Uh I don't know, because if let's say if I did short the market here, let's look at the probability. About a 1 to 7 or almost 1 to 8. Almost a 1 to 8. I mean, you can say is it worth it? Maybe. If you do 1% risk 1% since it's my C plus setup, that's a loss of 1%, gain of 7%, or loss of 1%, gain of almost 8%. Um, was this the high of Friday? This was the high of Tuesday. So I mean, price is likely to come here this following week, but I mean, considering the fact that it is a 2 hour time frame shift, that's pretty solid for it to go down again. But if it closes, what I'm seeing is structure 2 hour here. It bumps, doesn't create a low. It bumps again. Um, yeah. So I mean, I would say if price were to close above here, I think not even here. I would say if 2 hour closes above here, we're definitely gonna be going bullish again before retracing back down. I want to see this. I want to see buyers get shaken out because I'm holding. If price comes around here, I'm holding. Yeah. So that's pretty much everything that I wanted to show you guys. Um, I'm actually glad that regardless of me minimizing the amount of trades that I'm, you know, taking on a weekly basis, I'm still able to show you guys a or even record a good amount of what do you call it? Um, Still able to show you guys a good amount of stuff for a good amount of time. I did not show you guys my trade Zella, which I usually do, so I'll show that to you guys now. It's not looking the best, but I'm still gonna show you guys because I really don't care about what people think. But yeah. So here's my account. I have about $600 in it right now. Um, yeah, so this was last week. I took 16. So I took 16 trades. Again, the difference between, let's look at the difference between how I was trading before. So how I was trading before was about, um, 1 second, getting a phone call. All right. So what I'm gonna do is, yeah. So, oh yeah, what was it? Sorry, I got a phone call and I got super distracted. Okay, so let's say I'm gonna call it 75 trades to 16. That's a 78% decrease or a 78% improvement on my trading since the beginning of this year. 1 second again, I'm getting a call again. Yeah, sorry about that again. Mute. All right, should be good. 78% or almost 80% improvement since this year, just based off of the amount of trades that I used to take back then. Just keep that in mind. Um, According to last week's, because if you look at the week before, it was actually horrendous. I mean, not terrible based on me being in profit for the week, but based on the amount of trades that I took, yeah, it's horrendous. Um, Excuse me. Yeah, net P&L obviously bad. I might throw in some more capital into this live trading account. If you look at last month, it was actually bad. Like it was terrible. Look at this day right here, negative 477. Oh gosh. And I was trading a lot of foreign currency too, so I stopped trading foreign currency. Now look what happens when you stop trading foreign currency. You see that? $150 profit on Nasdaq. Small losses, like smaller losses, bigger gains, focusing on, commodities. And I mean, I seen this post with Umar Ashraf, the CEO, I think, of TradeZilla, and he made a post. He said, if you want to be, profitable or something like that, you're gonna want to switch from doing Forex. And I was like, you know what? This guy is this guy probably has seen the most amount of L's according to people's profit and loss and journal. So he probably sees that people who trade Forex, foreign currency, loses more than the people who trade commodities, indices, futures, stocks. So I'm gonna take his advice. And since I took his advice, things have been different in a good way. Trading less and winning a bit more. So I'm up for the month, which, usually it's not common for me to be up for the month during my journey of being a successful trader, a profitable trader. But yeah, progress. So I'm glad you guys are able to see the progress. If we look at the percentage, I don't know why. I think this happened like it's green because I added capital. I'm not sure honestly, because if we look at this right here too, it's like it doesn't really make sense because the week before I didn't add any capital, but for some reason these are, yeah, like I don't know, it's just kind of weird. I don't know. Um, yeah, so glad you guys could make it. Like, comment, subscribe, join my Discord, my free Discord. Um, I share my trading ideas for the week in that community, so you guys can, take a look at that and join. Again, let me know what you guys think about the two quotes that I shared with you guys from the book Market Wizards in this video. Um, Comment also what you guys, think I should do a video on next. So thank you guys for watching and enjoy your week. Happy trading.